So joining me to weigh in on expectations for this quarter is Peter Cardillo of First Standard Financial. Peter, great to have you here today.
Good to be back.
Well, we did get a handful of global economic data on manufacturing, and here in the U.S. we got both ISM manufacturing as well as construction spending. So given that all the numbers did come in above 50, we're awaiting earnings, and we have the meeting between Trump and Xi Jinping at the end of this week. What are you keeping your eyes on?
Well, we're looking at the unemployment numbers, no question about that, and also the Fed minutes. Now, today we had some mixed macro news. You know, we had construction spending, which was very strong, up 0.8%, a very sharp rise on a monthly basis that, you know, you can trace back maybe 2-3 years. So that was good news. And of course, we had the ISM manufacturing ticked up a little bit, showed a little bit of an expansion, but nothing too earth-shattering. So I would say that it's, you know, the news remains consistent. I think, you know, what we're seeing here is entering the second quarter of the year with less of an appetite for securities. I don't believe that we're going to see the strong appetite that we saw in the first quarter, which probably means that, you know, we could be entering a period of maybe just a tight trading range or perhaps even a slight pullback.
And you mentioned that we will be getting the Fed minutes this week, and of course we'll be watching out for any commentary that come out from Fed officials. But we do have the U.S. jobs report, and we'll continue to keep an eye on economic data. But in terms of earnings, what are you watching for? Well,
you know, earnings will begin officially in about another 8 or 9 days. So I think from now to the earnings parade, we'll probably just continue to focus mostly on the price of oil and, of course, the macro news. Now, as I said before, this week we have the granddaddy report of the month, unemployment, and we're looking for 195,000 non-farms growth and the unemployment rate staying steady. However, I think we could see a fairly substantial rise in hourly wages, which would relate to the fact that, you know, the employment market is getting tighter and tighter and tighter, and that we're, you know, basically in a full employment status.
And last but not least, before we wrap it up, I do want to talk about the end of this week. Now, we will be getting the jobs report, as you mentioned, on Friday morning. But we also have the president of the U.S., Donald Trump, meeting with China, Xi Jinping. So how do you see that playing out, and what should we be watching out for?
Well, you know, look, I think that it'll probably wind up like it did with Merkel. Nothing of any great importance, but I do believe that you know, we're getting closer and closer to a full-blown trade war, which means that the prospects of protectionism is quite real, and that could be a very dangerous situation, not only for the domestic economy, but for the global economy as well.
Well, do you see those risks playing out in the FX or equity markets at all at the end of this week?
I think as we get closer to the meeting, that we'll probably see the dollar, you know, act accordingly. Now, of course, the beneficial winner of the foreign exchange market, if we were to get into a serious trade war, probably would be the U.S. Dollar. So that could continue to stay strong.
Okay, Peter. Well, we'll be talking about that when I see you next week for our weekly interview. So thank you so much for your insight, and have a great week.
My pleasure.